we saw the second quarter numbers from the banking sector and for companies listed on the Nigerian Stock Exchange, and this looks really at least good enough. And it looks like this supports the second quarter GDP national data that we had. So it looks like all the data in line as we're seeing them from the banking sector. And again, but of course, let's talk about the financial services. Broad Street, too, in particular. How do this GDP relate from the main street to the market street? Omotola Abimbola, investment analyst from Afrinvest Securities. Good morning.
Good morning, Boasin.
Thank you very much for coming up with those very nice set of data that you folks analyze in terms of financial services sector growth rate into the GDP.
Correct.
But again, reading the numbers and you look at the contributions of the financial services sector, you try to break it down here over a 10-year average growth that we have in the sector. And I can see where we double down and then we saw aggression. Explain this to us.
Correct. Looking at the growth of the financial services industry, you could say that it has performed decently over the last 10 years. Coming from the consolidation of the banking industry in 2005, we have seen the number of banks in the country, reducing significantly to 25 from around 90 banks that we had before. But then the banks that he merged out of that consolidation, they have much more bigger balance sheets, they leverage on efficiency to increase their branch network and grow their operation and deepen the access to finance, by the average Nigerian. So that has reflected in the growth of the industry over the last 10 years, I would say. So the industry has grown by 3.5%. And for the second quarter GDP report that came out earlier this week, you will see that financial services industry was one of the positive growth drivers of GDP. Sector expanded by 10% year-on-year in second quarter of the year, compared to a growth of less than 1% in the first quarter. It was driven by both the insurance industry and then the finance industry as well. So creditably, the industry has done fairly well, looking at just the headline numbers in terms of the growth of the industry, as well as the size of the industry as well. 2005, financial services industry was valued at less than ₦1 trillion. But today it is valued at 3.5 trillion naira in nominal terms. So that goes to show the level of financial sector development that we have in the country. However, if you want to dovetail into looking at the access to financial services by Nigerians, you will say that we've barely scratched the surface, and there's still a long ways to go in terms of deepening access to financial services, including payments, credit, savings, pension, and insurance, by operators in the sector.
Give us a minute.
Okay.
Let's look at the second quarter GDP. If you're going to grow the economy, you need the banking financial services. Whether you consume stocks and bonds, shares, and is a different thing. Whether you buy insurance is not, but the banks have to be there to make sure that something happened.
Correct.
So we can't take this GDP positive reading for Q2 out of the banking sector. But again, if you look at the news, the kind of Achilles heels of the banking sector, which were the non-performing loans into the energy sector, what we call the power sector, into the oil and gas, downstream and upstream, with some of these problems beginning to emerge. You think this has been a very decent performance for this sector, for this GDP reading?
Correct, particularly in the second quarter of the year, because we had the movements, rather a policy shift from the central bank into a flexible FX framework in April. So we have seen the volume of foreign investments into the economy grow quite significantly, and you will see that the activities of investment banks, right, in the economy in the second quarter of the year, improved substantially because the volume and value of transaction in the capital markets surged as a result of that policy shift by the Central Bank of Nigeria. However, going forward, we still believe that the Central Bank needs to sustain the current policy framework, by allowing rates to be independently determined by market forces, so as to ensure that we have enough portfolio and direct investments in the economy. Which banks, are in the, serve as the platform, by which this capital are going to flow into the economy. So you can't truly dissociate performance of banks from the economy. They are the gateway in the real sense of it.
When you folks who are in the asset management side of the market begin to see inflows of foreign portfolio inflows, and some of these are still stories coming out of the second quarter from MBA, from the Central Bank of Nigeria in terms of capital importation and all of that, and reading all of that. And you begin to see investors' interest, even the local ones in the market. That looks like a signal to you, does it, that the GDP is beginning to turn a corner?
It is, in fact, because non-oil sector of the economy, which includes agriculture and the services sector, they are significantly, and as well as manufacturing, their performance is tied to the availability and liquidity of foreign exchange in the economy. So in 2016, when we had FX shortages, you saw that performance of the manufacturing sector was negative. We had a 4-quarter-long recession in the manufacturing industry. Same thing with services industry, which fell into a growth contraction in third quarter 2016. But with the rebound in FX liquidity, particularly in the second quarter of the year, we are beginning to see growth in manufacturing sector once again. And like you said, it should signal a rebound in the growth percent of the economy. However, I believe that a key lesson we learned from the recent crisis that we've had in Nigeria is that we truly need to deepen the domestic investor base in the economy, so that there won't be so much volatility in the capital market and in the economy when foreign investors are leaving the country, and that goes to show that we also need to have a high level of financial deepening in the economy. We need more people to be banked. We need more people to be investors in the capital market, so that we are not so reliant on foreign capital.
Let's go to this. We talk about financial access, and we're trying to do a bit of it. And you did a bit of a current. You folks did at Afriverse did a bit of a financial access in Nigeria using FINA as a basis. So let's put that chart. Let's put that table up there, and you look at this chart in terms of where we are when we look at some select countries within the continent. South Africa is still obviously the leader, and we're just coming around the corner at number 3.
Correct.
Despite our demography and everything else.
You're right. Looking at the population of the banks and the unbanked in Nigeria, you will see that we have a very low level of financial